Hello, today is the 16th of November 2011. In this video, we'll take a look at silver, the Dow Jones within the VIX, as well, what together that is, and crude and Brent, the oils, as well as the spread. So let's get started within silver. Uptrend still intact, but that of barely. As far as the Fibonacci lines from this high to this low, it's in the middle part. That means the market is that of neutral. But because we have this downtrend, or we're making a pattern really of higher highs and lower lows, which will always create a symmetrical triangle, and it's always indecisive. And when we take a look at this on the quarter day chart, we can see the pattern of these highs lower on each one and the lows getting higher each time. Now, this pattern can only stay for a short period of time. A lot of times when it breaks to one side or the other, the volatility can be grander or increase. However, I have absolutely no idea what the prognosis is for how this symmetrical triangle is going to be holding out. Now, or which direction it's going to go, break out or break down. It has been holding this significant Fibonacci line of about 33 1/3. But the significant thing is you say that to yourself, okay, maybe that gives me reason why this should be going higher, and that might be it. But if it doesn't hold this level and starts breaking through, it wouldn't be a surprise to see a fast move come down to the 32 fiat dollar level. The next chart we're going to take a look at is the Dow Jones Industrial Average and how it works within the volatility index. And I don't like the name volatility index. It's like a fear index, and the reason why is because I've seen days where the stock market or the Dow goes up like 350 points in a day. And surprise, surprise, the volatility index goes down. No. 350 point up day is fairly volatile, so it should go up. So no, it's not a volatility index, it's a fear index. Now what I've noticed within the VIX is when the level's below 16, things are really fine with the market. Between 16 and 24, things are doing pretty okay, but there's little reasons for concern. Between 34 and 32, things are not exploding with major reasons for concern. And above 32, major reasons for concern. Above 48, things are crashing basically. So the 16, 24, 32, 48, these are the levels I've been using for a little while anyway. But what I think is very noteworthy is if we take the Fibonacci from this high to this low and see how the VIX played out, because when the market caved in back in 2010, the VIX index went all the way up to about the 50 mark. When it managed to really break past this significant resistance in here and really start to break away, the volatility index was already down to 22 and below the 24 mark, saying things were doing fairly fine. Now today, when we take a look at this level in here, when it broke through the 61.8% mark, the VIX wasn't below 32. It's been at this mark. Therefore, in my opinion, if a level breakout above 47, I guess, is a good level, hitting 50 anyway, if we see that, then that could give us a really significant down wave within the market. Now let's move this on to the crude oil and the Brent. On the top is the Brent, and on the lower part is the crude oil, going back to 2010. Let's look at the comparison in here. Well, we had this downtrend, and the downtrend came back to its previous range. Whereas on the Brent index, when it had its downtrend, it never came back to any previous levels of resistance. Also, what do we see in here? Well, we see that it's broken this downtrend and it's having a nice little uptrend. In here, it's rather just merely broken the downtrend and is now trying to find support at that level. Now, during the big gain in here on Brent, did it have the same sort of gain? I mean, they both had uptrends, but Brent didn't have anything like this. And a lot of the reason for this is because the spread has been changing dramatically. I do not have old information on the Brent index. In fact, I've been trying to find this for the last few months now, and I finally found over forexpros.com the data going back to start of 2010. So I've heard that the crude oil prices in the past were higher than the Brent. Well, that's changed now. Let's now move on to the spread between the two things, and that's the, never mind, that's the one we just looked at. This is the spread. So basically this is crude, or Brent divided by crude. And before here, this was pretty much at a par level. In fact, if we draw in this level in here, we can see that it was pretty much around the same, but roughly around the start of 2011, things started to change because, boom, there's this uptrend, but obviously crude oil has been rallying much nicer than Brent lately, and because of that, it's pretty much retraced. Pretty much, no, it has retraced. Now the Fibonacci from this low to this high works out to 109.5. Just saying, and I don't even know if this is the low because, like I said, I do not have data going back before 2010, but the spread is moving closer to that 109.5 level. Thank you for tuning in to today's video.